Welcome to TradeTheNBA.com. This is John. This report is for the 20th of September. Well, nice comeback from the market. We dipped below that 23%. It was short-term buyers that kept the pressure up here and a little bit of softening from shorts. So every dip below that 23, we can see that there was short covering, and that caused some buyers. So staying above that 23%, kind of critical, significant on the DOC with that orange dip, because a little bit further and you're going to have that dip below red, and just in time for a cycle turnaround, and that would be enough to stabilize and or lift the market even higher from where it is. Magenta pivot up here also on the MBI, so it's above yellow, which is kind of critical. When you have that breakdown, you expect it, sometimes when it first cascades lower, it can be ahead of the yellow collapse, but once it gets below, it should stay there, and if it doesn't, then once you get that pop, it usually gives you a little bit more strength. So I would expect a little bit more of that continuation, particularly within this construct here of fading MBI weight. So there's the potential. I mean, still negative in the shakeout and all that, so I'm not expecting massive party parade, but at least some potential support, at least around that 23%. And kind of stuck in no man's land here, because you're between that 39.71 and the lower side of the 23% at the 38.83. So that's where utilizing 50K, 5K chart will be important during this time period while we're in flux. And again, this is just that uncertainty as to the direction of economic conditions. We're in a situation where everyone knows the details, but unfortunately, there's such a confluence and there's such a problem with the data that comes out, having been massaged and edited, especially when we see so much real-time data that we can actually make assessments based on what's really taking place, and then just at complete odds with what ends up getting reported, and of course then gets revised later on. So depending on people's market bias, they tend to go with whichever. I prefer to stick with the readings, because that's where the money is going to do it, and sometimes it can be completely counter to what is taking place in the actual arena of economic conditions. But NQ looking pretty close to identical to the NASDAQ, a little bit softer from its shakeout, but it wouldn't take much to bring that up. Even when I look at the extreme, that we didn't dip below the red line, or any of real catastrophic where we get the dip of the red. So the potential for supporting at this particular stage is still there. Right now, it's off modestly. And I think we're going to get that. This is part of that volatility that, because that uncertainty brings, going forward. Recession is a short. How strong will that recession be? That becomes really the ultimate question, and that's literally all the market is fighting. How soon before the Fed has to either stop its assault on rates and or flip back to easing, and what method that will take. I think the Fed is probably going to utilize some other options via liquidity. I mean, of course, obviously they're not buying mortgages anymore, but they could just let certain treasuries expire, reduce their balance sheet in a variety of different ways. It'll be slower. They've already been a bit aggressive with this, and actually things have held up quite well despite that. So that was a little bit surprising. So they weren't wrong when it came to the resilience of the economy, though, like I pointed out, it would be regional, and certain regions have fared better than others. And we're looking at the euro, and that every time they talk hawkish, it gets a nice little bounce, and then the realization comes that things are really kind of bleak there, so it just holds on. Barely. And from a gold standpoint, likewise, the deflationary viewpoint is still the strong forward-looking view of next year, that you've passed that peak inflation run, even though it still remains high. Again, that's simple for us to see, because we look at oil, and you can tell from where oil is exactly whether or not inflation is going to run hotter or colder. And then, of course, with supply disruptions and that's still being worked out, you have limited goods that people have to have, and so they trade higher for them. This is still relatively expensive for what oil could be, given that we know that just from a few years ago, was far less, and not a whole lot has changed other than the arbitrary imposing of the sanctions. Irrespective of the political aspect of it, that's the net cause of it, and that's exactly why we have the inflation beyond the excessive money printing that we all know. But that being the reserve currency and everything traded in dollars, not been horrible, and we've actually sucked up a lot of that liquidity with the rise in oil prices, which is why I don't know that the Fed needed to be as aggressive as they are, because a lot of that free cash flow has been drained, and you've reduced a lot of the upside speculation by making money a little more expensive, which took away all this Bitcoin free money travel, and you can see the result of it. We're right back down to where we've been for quite some time on it. And of course, everyone talks about every dip Bitcoin goes and makes new highs, and that may still be the case, but a lot of people are underwater and not thrilled, and nothing looks to be changing anytime soon on that. From a ETH standpoint, even though it's been relatively stronger, still suffered significant decline from its peaks in the 4,500 range. We're still down at 13. That's a significant decline from where its peak was. From a 50K standpoint, you can see that we started building up early on in the day, and it pretty much just continued, getting a little soft peak right here. That's filling back. We got a couple of positive extremes going back to, was that low 39 even range. We're just above that, so that shouldn't be much for that to fill. And again, the range intraday, when we look at the 5K, we started off with the terror, and everyone was afraid in Europe, faded off that, and then right before the market started opening, buyers came in to suck up the discount that they believed existed, and then we sort of just bounced a little bit, but mostly was buy configurations until a little bit more mid-morning. Some of the profit takers took advantage of that, filled back some of these earlier positive extremes that went all the way back over and through here, and every little bounce was creating minor positive extremes. But we had some decent signals uh, that turned around here with the magenta popping up, and it becomes really clean when you see it from that standpoint. On DOC, you get the steel rising, you get the orange falling, green over red, and then it corresponds to the magenta, bouncing above the yellow, but in this particular case, always having stayed above white, and produced a nice move. Should have gone a little bit further to the 100%, so it was a little bit later that we ended up with some softness, but then it finally did move back up to that 100% level. And that led to the late day buying frenzy that took us all the way up. And from that frenzy, we get the fill. We get some more positive extremes to take out a little bit lower. First being right around this level, the 38.94. Should mark that one for everyone, horizontal line. And then we have a series of them going all the way up through. This early secondary break will be the first one. That's right around that support area, the 39. So we'll see if we dip there in the pre-market, satisfying that, and that would lead to a new set of turnaround. So all in all, really good stuff. Again, I'll probably do one report at the close of market coming today, and then I'll be gone for the rest of the week. But could be interesting because we may actually be getting a little bit of a turnaround, or at least some type of stabilization, barring any dramatic upsets, which can still impact things. No question, we're still in a generally weak configuration, but it's poised at an area on the daily at least that things can turn around. Pivot back up of orange would probably negate that. So that's what I'd be looking for at this particular stage, because we're definitely in the rising DOC red, and that category is just a really for positive. You need that shakeout to really move back towards the zero increase. Otherwise, difficult times still remain. And of course, there's that white NBI lead. Didn't get up into the 40 range, but still strong enough that puts some downside pressure still exists. So I think that we're going to have to just wait for a little bit more data and see what the Fed ends up doing. I think that's really the catalyst. There's going to be some people wanting to front run it, but we're just going to have to wait for it to actually pull the trigger, because I just don't see why they would end up doing a surprise move to be overly aggressive. There's no real need from where we're at, but that hasn't stopped from doing crazy things in the past. So anyway, that's the long and the short of it. Trade well. Talk to you later. I'll see you on the Skype chat.